Is the bond market attractive in 2019?
Well, the outlook for global bonds is mixed because we have on one side weaker economic growth, which is supportive. On the other side, central banks are buying much less bonds than before. So the outlook is mixed, but we like emerging market bonds and we like US bonds, especially inflation-protected bonds.
How do you see monetary policy developing in view of rising inflation?
We still see this process of normalization of monetary policy, but real rates and rates in general remain actually very, very low. The Fed may pause in the short term, maybe they hike once more. The ECB will probably not hike this year, but in general terms, we are moving towards a period of global monetary tightening.
So what is your view on more risky bonds, given the increased leverage?
We are very cautious and actually worried about corporate bonds, especially in developed markets, because leverage is very high. There is a peak in economic momentum, profit growth is weakening, and this asset class is still not cheap enough for us to feel confident about.
You mentioned emerging markets before. Which one are you positive on?
Well, we like especially emerging market bonds in local currencies, because local currencies are actually very cheap. We like countries like Mexico and Russia, where real rates are actually much higher, but we also feel that in emerging market corporate, especially in short duration emerging market corporate, there are significant upside in the short term.